It's Fed Day. That's our topic on today's Backstage Pass. Well, hey friends, hope you're having a great Wednesday so far today. Here at midday, stocks are down, mortgage bonds are flat as everybody waits for the Fed to finish up their November meeting. Mortgage bonds are up about 6 basis points at the time of recording, but mostly flat. They've been down a little bit and up a little bit, mostly flat. The 10-year yield is flat, trading at about 4.05%. The national average for a 30-year fixed rate mortgage, well, that came in yesterday at about 7.09%. And like I said, today is Fed Day, and everybody is expecting, we've been talking about it for about a week, everybody's expecting the Fed to raise the Fed fund rate by 75 basis points. That news is going to be announced at 2 p.m. Eastern time today. That's what we're expecting. What is going to be the thing that moves the markets is really how the market interprets the Fed's intentions going forward. So we're looking at it like this. If the Fed says that they are going to maybe slow down their rate hike for the Fed fund rate in December and then maybe stop the rate hike starting next year and just hold it where it's at, well, that could indicate that the Fed thinks that their efforts on inflation are working, could cause a rally in the bond market. But on the flip side, if the Fed says, hey, we're going to continue raising the Fed fund rate this next time and into next year, we're going to continue raising the Fed fund rate, well, that could spook the markets because the markets could interpret that as the Fed feels like they're not doing enough and inflation is still a problem. And so that could actually cause the opposite. We could see some selling pressure. Now, the Fed probably won't directly address that in their announcement at 2 p.m., but there is no doubt at the press conference, which starts at 2:30 Eastern p.m., there's going to be a reporter that's going to ask Jerome Powell that question directly. How he answers that question, that's going to be the market mover of the day. Now, in other news, we got jobs reports for the month of October. This is from ADP, and it showed that there were 237,000 job creations in the month of October. That was better than what was expected. And inside this report, when you start to dig in, it shows that people who stayed on their job year over year, well, they saw a pay increase of about 7.7%. And people who changed their jobs, well, they saw a pay increase of about 15%. That's a little lower than the previous reading, but still showing that pay increases are happening. And then we also got Mortgage Bankers Association mortgage application data for last week. This shows that purchases fell last week by 1%. They're now down 41% year over year. Refinances were flat week over week, but they're down about 85% year over year. And interest rates fell slightly last week from 7.16% to about 7.06%. So interest rates dropped just a little bit last week. Now that's all the news that we have for today. Remember to stay positive. As the news comes out of the Fed, we'll definitely be bringing to you anything that's going to move the markets and let you know that that's happening. But we'll probably discuss a little bit more about the Fed's press conference in tomorrow's video. Have a great day, and we'll see you tomorrow.